Joins us, represents Kotak AMC to talk about how things could move for the market today. Nilesh, what do you make of the mega PSU bank consolidation which has been announced today? Do you think the major consolidation is a baby step, but it is in the right direction?
If we see from May 2014, all the listed PSUs are down in market cap by 21%, and majority of them are public sector banks. On the other hand, Sensex is up roughly about 66%. So effectively 66 plus 21, it's an 87% underperformance in just last 5 years in public sector stocks. Now, there are multiple causes for this. I think one of the reasons why public sector stocks have not performed is not because they don't have incredible assets. I think many companies are monopoly. They don't have incredible talent. In fact, whenever we have seen private sector hiring public sector employees, they create miracle. It's all related to environment. Compensation of public sector employees at the top is significantly at a discount to market price. However, average public sector employee gets more salary than average private sector employee. The administrative freedom to carry out work is hugely restricted in public sector organizations compared to private sector organizations. So this merger is a step in the right direction, but it is not the final destination. We must empower public sector organizations to take administrative decisions without external influence. We must ensure that the top management of PSUs are compensated in line with the market salaries. If we can give them administrative freedom with this incredible talent and assets, I am sure PSUs will create a miracle.
Well, the PSB mergers will lead to improving operational efficiency, but also creating large entity. Also, investors are worried about weak banks being merged into large banks. What do you think it will do?
Well, if size was the only criteria, then dinosaurs would not have been extincted. The reality is that it is the nimbleness in today's world where we are seeing a fundamental change in the how banking system operates. There are fintechs emerging out of any part of the world which can come and disrupt the banking system. So it's not the size, it's the nimbleness. And as I mentioned earlier, unless you attract right talent by giving appropriate compensation, unless you give that talent appropriate freedom to work, these models are unlikely to succeed.
Nilesh, now this is, the second major announcement that we've seen by the government just in the last 2 weeks. So how do you think the FIIs and DIIs are going to react to this with the perspective that there is intent from the government in order to reform, implement reforms and lead growth?
Undoubtedly, investor sentiments were impacted by multiple factors. Especially in the case of FPIs, it was FPI surcharge. It was also non-settlement of trades on the exchanges related to derivatives. Now, clearly this announcement by the government are step in the right direction. However, let's remember that this is a test match. You have played one over particularly well, but you must continue this tempo for many overs before spectators get convinced that yes, this team is there for winning by a handsome margin. So market will be expecting maybe in ye dil mange more mode, but they will be expecting more steps from the government to lift the sentiments as well as the economic fundamentals.
Now, the government has made the announcement and that's going to impact overall sentiment, but the fiscal is controlled. So do you think that the fiscal control, taking steps at the grassroots level, is that something that the street wants to hear?
So one, we have taken lots of good steps in the past. For example, in the past, growth was coming because every Tom, Dick and Harry could borrow money from banks. Now with IBC, that's not the case. NPAs have been recognized and provided for. And when you don't give money at free, the growth is bound to get impacted. In the past, our fiscal profligacy was visible. Now, even with off-budget borrowing and 7th pay commission implementation, Fiscal situation is reasonably under control. It's not most ideal, but it's better than what it was before. Third, in the past we were victim of double-digit inflation. Today, by grace of God, with oil prices and some deft management by RBI and the government, inflation is in lower single digit. In the past, subsidy leakages were happening. Now, subsidy leakages through direct benefit transfer has been controlled. So we have taken multiple such steps which have improved our macroeconomic situation. In the past, tax compliance was an issue. The fair tax was paid probably only by the salaried class. Today, tax compliance has improved. It has still not reached ideal stage, but it has improved a lot. But more importantly, there are certain fundamental issues which we have not settled. And while government has announced many steps, I think there are three fundamental issues which remain. In policy making today, we don't know whether the priority is towards growth, inflation, or fiscal prudence. I think as a country, we need to set our house in order by giving growth a priority. If growth is there, there will be higher volume, higher revenue, higher taxation, fiscal will be taken care, not other way around. If growth
All right, thanks much, Nilesh, for joining in and sharing with us your view on all of the government reforms as well as the big PSB bank recapitalization and the mergers. 10,927, that's the indication on the SJ Nifty after we had quite a fiery session on Friday. Wanted to get in your take on some individual stocks. Dr. Narayan, what is your outlook when it comes to the Pharma pack? There has been some news this morning for Aurobindo as well as Divi's. How are you looking at the basket as a whole? Do you think that now, with the kind of volatility, it's now a space to look at?
Well, if you look at the Pharma index, that seems to be on a bit of an improvement, but then that's pretty slow. But there are select stocks which are doing better compared to the Pharma index, I would think Divi's is certainly one of them. Aurobindo has been lagging the Pharma index for quite some time. But that said, you also have to take notice of the fact that Aurobindo has not really seen too much of a price damage, except recently there has been some amount of softness. But I do believe at 550, Aurobindo put in a bottom and it's now on the mend. So I would certainly want to take a look at that every time there is some sort of positive news flow. Divi's, I think, has been on a very strong wicket a little earlier and now is undergoing some trimming from the higher levels. So that is more likely to range and not produce the same sort of upside action which I think Aurobindo could do.
Well, rupee is at 72, bond yields are at 6.5. The pre-session rate, so the pre-opening session is telling you that Nifty could be in for a very flat start. I want to look at SBI and some of those banks where the merger will happen. Let's put that data out, where PSU banks, and especially the strong ones, are set to open, which is what will happen to Union Bank, Canara Bank, where are those banks and how they essentially are getting impacted because of this news. So Canara Bank is down 3%. Syndicate Bank is going to be part of Canara Bank, so that should gain ideally. Andhra Bank and Union Bank would be merged, so Union Bank in this case could end up becoming the guinea pig at least in the short term. Corporation Bank and Andhra Bank, these banks have in a sense have lost their core existence. So the smaller banks today could rally. The strong banks today could remain under pressure. And I guess markets have learned from the experience of SBI subsidiary mergers and what's happened with BOB and Dena Bank, that banking merger on paper is a great concept. But there's a difference in concept and there is a difference in practical implementation. If you mix, it is, PSU banks are not homogeneous basket that you can simply merge them. They're different geographies, different books, different technology, different officers, different credit culture. And when you mix them, it's going to be a problem in the short term. And that is what I think markets would fear. But optically, if I look at the market, we must regard the fact that the government has taken some bold steps. These steps have come in a very concentrated manner. The entire last week, one day after the other, we had some news. One day on FDI, one day on RBI transfer, PSU bank merger. So there is definitely a machinery which is at work, which is recognizing that right now economy needs to be fixed and things are not looking all that strong. The GDP number is not capturing that data. Also, what the GDP is not capturing is that monsoons have picked up and the fact that government spending will increase in coming quarters. So I would take this entire slowdown talk with a pinch of salt. You don't make money by reacting to yesterday's data. You make money by judging what will happen in the future. And in future, if things improve, then this may just turn out to be a good buying opportunity, at least in some of those stocks where the slowdown is cyclical. Autos, big drop in wholesale data. Retail data is not out yet, but I've been told the retail data is down by about 10 to 12%. But markets have opened, and let's look at the rates and where are we in terms of the first rates. And the first rates are telling you that it is not, it's a cut, but it's not that things have been smashed out despite all the slowdown headline on GDP, on autos, and again on the revenue tax collection front. So markets are stable. You got to give market a benefit of doubt here. 300 points now it's cracking. No, now it's cracking. Now the selling has accelerated. So 100 points off for the Nifty, 300 points down for the Sensex, and for the Bank Nifty Avan, I think we'll have to pick up all the stocks one by one.
Yeah, we'll have to. Let's just look at that headline number for the broader end of the market. Deep cashes, by the way. PNB, OBC, United Bank, that's looking, you can take a look at the rates on your screens. All of them have gotten off on the back foot. Canara and Syndicate as well, as we were flagging off. There's Union, Andhra Bank as well as Corporation Bank that are going to be monitored and put together. And then Indian Bank and Allahabad Bank. So you can see a mixed reaction coming in for some of these names, as Nikunj said as well. It's some of the smaller names that might see a bit of cheer, but by and large, you're seeing red. The slowdown in auto sales has been very evident. Tata Motors, a 58% drop in their passenger vehicle sales. Maruti sales in the month of August have been down nearly 33%. M&M as well has felt the heat. The two-wheeler sales for Hero Motor on a month-on-month basis haven't been all that bad. Eicher as well has seen a slowdown by nearly 24%. So across the board, you've seen most of these auto numbers seeing quite a bit of a hit. Let's pull up some of the other names then. You've got Airtel in focus. Remember, they've come out with a digital platform that's extreme with 2 new devices to take on Rel Jio. Jet Airways, Synergy has said that they're ready to take majority stake in the airline, but as of now, the lenders have drawn a blank on the bids. Titan, by the way, has lowered their overall expectations in terms of growth. That stock down nearly 1.5%. There was an unfortunate massive fire at ONGC, their gas plant in Uran, though the management said it's under control. Yes Bank got the shareholders' approval for increasing their share capital. They've approved further fundraising as well. That's stock at 59.4. And DHFL as well has approved the conversion of debt into equity, so keep an eye out on that. And Aisha, but the headline number is reflecting a downtick of nearly 1%.
Yeah, that it is. But you also have to remember Friday we were not trading. Although Friday also it wasn't like a deep cut when it came to the global markets. Just want to revisit some of those names from Friday's session then, and I want to check in on Idea, I want to check in on Ujjivan, Page Industries, which made a bump up after quite a long haul. And yes, Bank, like Avan highlighted, that after that gain of 4.5% on Friday, today it's in the red. That's how it started off. Net, if you really have to summarize how some of these PSU banks have reacted to the merger, it's largely a sea of red. Though I want to check in on BOB. Because that's one of the banks where the merger has already taken place with Vijay and Dena. That also starts off about a 1.5% lower. PNB, OBC, United Bank, Can Bank, Syndicate Bank, Union, Andhra, Corporation Bank, Allahabad Bank, Indian Bank. It's largely a sea of red all across. And yes, it's the Motown blues which are really hitting some of the stocks pretty hard. M&M down 2.25%. Maruti down. It's, I think, sub that 6,000 mark yet again. So just floating around that 6,000 odd level. Eicher Motors as well lower by about 2.5%. And that's pretty much the state across the entire Motown pack as well, as is the case with markets. CK along expected lines, but is it bound to get worse during the course of the day?
Well, the opening is certainly along expected lines. Of that, there is little doubt. Now, the question is, like you said in my opening remarks, what is the extent of BTST long positions? Because I think that is what will push the market down. Having had a long weekend, I don't believe too much of positions would have been carried forward. So if the market has to go down afresh, it will be pressure from BTST and whatever new selling that may emerge here. For new selling, I think we may have to wait for about 30 minutes to see. People will want to see where the chips fall. So there's no rush to trade the opening. I think one should wait for about 15-20 minutes, see how the whole market shapes up, and only then take positions, even for an intraday nature.
Right. We still have Nilesh Shah with us. And Nilesh, when we look at the GDP number released, it's looking pretty weak, and I mean, I'm just putting it very, very mildly there. Do you think things can get worse before they get better from the growth in the economy, given the 5% number?
Undoubtedly, July and August will have some impact of floods and monsoon. More importantly, the data so far which are coming as a lead indicator from automobile sales and others, it shows that July, August, September will be probably worse than April, May, June.
Right. But looking at the GDP numbers, the overall situation, the sentiment, lending growth being low, do you really think rates in the system will come down further, which should sooner or later, act as one of the catalysts for growth, perhaps?
Undoubtedly, today the average corporate India is paying interest burden of 6% real interest rate. I don't think so there are any countries in the world where corporate world is paying this kind of interest rates. Globally, you don't make 6% real return in equity. How are you making that in debt? In fact, on one side, India gets invited into G7 even though it's not a member. So we are in the August company of US, UK, France, Germany, Japan, and so on and so forth. On the other hand, our real interest rates and nominal interest rates put us in the bracket of countries like Argentina, which has just defaulted, Iran, Turkey, which are going through massive crisis, Ukraine, which has gone through massive crisis. So I'm not unable to understand why on one side we are getting invited into G7 and why on the other side our interest rates are comparable with nations like Argentina, Turkey, and Iran, which are in imminent crisis.
The auto sales numbers, Nilesh, what is your analysis? Do you think that this kind of a weak trend is going to continue? Or do you think that auto will be one of the lead indicators for a pickup in growth? Are you banking on the festive season playing out in the next month?
Undoubtedly, auto will be a lead indicator of pickup. Auto components and auto financing is roughly about 49% of India's manufacturing GDP. If half of your manufacturing GDP is under cloud, undoubtedly recovery cannot happen. Now let's just analyze auto sector in a whole. It get impacted by way of regulatory action, where insurance costs were increased for 3 years and 5 years for motor cars and two-wheelers. And if you do an analysis on most of the petrol pumps, and I did that in a rich area of Mumbai called Juhu, most two-wheelers are filling petrol of 50 rupee and 100 rupee. When they have to pay 5 years insurance upfront, it's bound to impact demand. On the other hand, there were policy intervention about electric vehicles. By 2023, government intended all bikes to have electric engine. I mean, that's a tall target, and manufacturers, the large manufacturers who are exporting all over the world, were not in agreement with that. The third came by way of financing. Many NBFCs which were financing two-wheeler financing or four-wheeler financing, they stopped financing. The interest burden on consumer was very high. So effectively, multiple factors came together at the same time: higher insurance cost, lack of financing, lack of worry on the way two-way electric vehicle policy will come. All these things have put auto sector under trouble, and they will look forward to the steps taken by the government in order to revive the sector.
Thanks very much, Nilesh, for joining in. In fact,